The US dollar fell across the board on Friday as a sharp drop in the US government bond yields hurt the greenback's appeal. The dollar found little support from data that showed US employees maintained a robust pace of hiring on February, giving the US economy a strong boost as it confronts the coronavirus outbreak. The US dollar index fell by 0.39% to 95.95 on Friday, its lowest in about a year. For the week, the greenback lost 2.6% of its value against the basket of 6 major currencies, its worst weekly performance since February 2016. Worries about the coronavirus have left market fundamentals in the dust, and the US 10-year note yield sank to a record low on Friday. Markets now bet the Fed Reserve will again cut rates by 50 basis points this month, after an emergency rate cut of 50 basis points last week. Meanwhile, the euro rebounded amid the weaker dollar. The common currency closed at 1.1286 on Friday, posting a 2.6% rise on a weekly basis. Currency volatility gauges rose on Friday, with the 1-month euro-dollar implied volatility reaching its highest since November 2018. Sterling, in its turn, extended gains against the broadly weaker dollar and was also boosted by comments from the European Union's Brexit chief negotiator that a trade deal between Britain and the bloc was still possible, and this year. The pound ended at 1.3050 on Friday, logging a 1.2% rise week on week. Elsewhere, in the crypto market, Bitcoin closed at $9,180.60 on Friday, posting a 4% rise week on week. However, over this past weekend, all crypto assets fell sharply as global stock markets saw massive sell-offs overnight. So Bitcoin recorded a double-digit loss of more than 10% over the weekend. The sharp drop comes as the broader financial markets are experienced unprecedented turmoil. Noteworthy was the massive drop in the oil prices as the markets opened on Monday morning, with the price of Brent oil falling by more than 25% from Friday's close to Monday's open. Brent crude settled at $45.27 a barrel on Friday, its lowest since June 2017, and opened at $36.55 a barrel on Monday. The sell-off followed the collapse of Saudi Arabia's oil-cutting alliance on Friday, with Russia refusing to make deeper cuts to output despite the sharp hit to demand from the coronavirus outbreak. Saudi Arabia's response to raise output and offer its crude at an unprecedented price discounts came despite a weakening economy and the threat of coronavirus becoming a global pandemic. Traders were sparked by Saudi Arabia's decision to launch an effective price war just days after trying to secure a deal with the OPEC Plus to reduce production. US benchmark West Texas Intermediate settled at $41.28 per barrel on Friday and fell to a low of $30 a barrel. Growing concerns have triggered safe haven flows toward gold. The precious metals prices closed at $1,672.40 per ounce on Friday. For the past week, it rose by 1.8%. Safe haven demand continues to grow, with the gold prices push above $1,700 as investors fleet in stock and oil markets at the start of the trading week. You were watching Currency and Commodities Market Review on InstaForex TV channel. We keep monitoring the financial market situation. Subscribe to our channel and keep abreast of the latest events. See you soon.